So this is weekly commentary. I believe this is weekly commentary 26. So let's look at the DXY weekly as usual. So right, we expected, if I go to the full screen mode, I expected the retracement down low into here. Now overall for the DXY, I've had a bullish bias. Of course, we expect retracements down lower to, carry on the continuation of the upside of the DXY. And, just kind of struggled really to gauge the retracement. I wanted it deeper here. I would have preferably loved it to go, into this fair value gap because then the I have more time to be a buyer up until this range gets hit, right? The deeper the retracement, the better because then you have a drawn liquidity for a longer amount of time, and that's what you want. You want your draws on liquidity to be for as long as possible so that you can have a bias and just keep trading in line with that bias for as long as possible, right, until that objective is hit. Now, where is the 3 month target that I'm expecting to trade to? If you're new to this mentorship, it is this area here. So you got these two up close candles before the down move, which is the order block, and is with this fair value gap as well. So I want to see the trade at least into this candle, which is 113.718, right? But I'd want to see at least this candle's wick get traded to. So I say 112 point, maybe 2, because that 2 is a nice, algorithmic number for um, where commerce takes place. Is, I've touched on it, I think, in a weekly commentary before to do the round numbers. It's the 0 levels, the 20, the 50, the 80 levels as well. Because those numbers is just, you have to remember the market is not facilitating trading, it's facilitating trade. Now, when these large orders come in to facilitate, the exchange of a currency, the market will preferably offer, a nicer number for the ease of transacting. There's something called transparency costs. If you study trade, economics and trade, there's something called transparency costs, and it's the cost of exchanging currencies. Now, the transparency costs are less when there is a nicer exchange rate offered for transactions to do with currencies. So that's the theory and the idea behind the 20, the 50, the 80, and the 0 figures. So consider those. If you have arrays, right, like this fair value gap, and within your array you have one of those figures. So in this one, right, you have the you have 12, 1112 big figure, and 1112 20, right? And 1112 20 is very close to this fair value gap, the bottom of this order box wick. So that's something that I'd consider. And if you haven't done that already, make a note of it. If you have an array, right, any order block, any fair value gap, right, any mitigation block, whatever it is, and you know that price range, because remember the array is a price range of a candle, right? If that price range of that array happens to fall in one of those figures, the 0, the 20, the 50, the 80, consider those areas within that array to be traded to, right? And those are the arrays that I really love to take if they have those mid figures inside of them. So let's talk about the DXY. So we've moved higher now, right? So we traded off this candle. I wanted to really see this retracement down into here. Would have been very nice sweep on this low here, but it wasn't offered, and that's fine. Now we've made a swing low, right? We've made a swing low. Now, if you don't know already, this is what a swing low is. If you go from here, let's move this. This is a swing low. Now, what makes this a swing low is very simple. This is all I look for in a swing low. The middle candle has to have a low that is lower than the candle before and after. Simple. Now, what makes a swing high? I'm not really the best at using this tool. It's my first time. Now, what makes a swing high is this, right? So this candle's high is greater than the candles before it and the candles after it. Now, if I put this here, oops, can I just, right? If I just remove this for a second, you have a swing high and you have a swing low, right? So now, on in a bullish narrative, when the swing low is created, and essentially the retracement that you're trying to gauge, right? The measure of the retracement that you're trying to catch is where is this swing low likely to form? It's likely to form in, one of your arrays. This is the theme of the entire mentorship. You're trying to gauge specific logical areas for your retracements. Now, this is where your knowledge of chapter 2 comes in, right? And the times that it happens in, well, that's your chapter 3, the days of the week. You know what days are likely to place the low of the week and the high of the week, right? Now, when that swing low was made in a bullish narrative, what are you expecting to after the retracement's done? You're expecting it to run to its draw on liquidity, which is here. This is the current drawn liquidity, this buy side liquidity pool that rests above here, right? Now, if we go to the daily, and this is something that, immediately kind of invalidate my bias, and I only do these weekly commentaries on the weekend, right? I don't really get a chance to talk um, midweek, but I'm very active on that Telegram group chat with you guys. Now, Monday was this candle. Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, Monday was this candle, I remember. Friday we left off here last week, and I wanted to see how we're gonna respect this fair value gap. And what happened? This candle just traded right through it, and I was like, okay, that's fine. Mondays I don't trade for that specific reason because why? I want Monday to be in line with my narrative. If it's not, then I need to revisit because this simple sitting out that Monday, what did it tell me? This this bearish price array that I'm expecting to retrace lower, it's got disrespected. And I'm fully aware that we rejected off this order block. It's just I wanted the run on this low. Now I'm completely aware of this order block right now, right? And what happens is we're displacing higher. After rejecting off that order block, we're displacing higher. Then what happened? It's clearly we're gonna run some highs. Now, this is a simple signature that I milk. We have a high here, and we have this low. Low, high, lower low, and now we're making a higher high. What is that? What do I teach that? What have I taught that throughout this whole entire mentorship? That is a market structure shift. Now, your market structure shifts. You want them in line with your bias. When you're bullish, you are looking for this simple signature. Low, high, lower low, higher high. What does that show? You took out sell side liquidity and you're delivering it to buy side liquidity. That is a bullish context for me, right? Adding to the fact that you're respecting this low traded into that bearish weekly order block, right? That bullish weekly order block, sorry, and now we're displacing away from it. So you have a market structure shift on the daily off of a weekly price array. What does that tell you now? That tells me that we're I should anticipate as a trader higher prices and I should expect a delivery to buy side liquidity. Now, I want to touch on something now. Now that we have look how I'm building the bias. These weekly commentaries is purely me building the bias. Right now, this talking that I'm doing to you guys, what's going on in the high time frames, this is how you build a narrative. So we rejected off this weekly bullish price array and we broke, a market structure shift. The low, high, low, low, high, high. Now we have this breaker block immediately created because of the market structure shift. The highest up close candle prior to the low being run and then going higher. That is the breaker block and the signature for it is the low, high, low, low, high, high. That is a bullish breaker, right? Now, let me just remove this for a second actually. You see there's two fair value gaps here, right? Pause the video and see if you can identify. There's two fair value gaps here that should catch your eye immediately. This one from this candle's high to this candle's low, and then you got this one, this candle's high to this candle's low. I want to see the retracement back into this candle's fair value gap. Why? because this is the fair value gap created through the expansion of running the high. You see this fair value gap. If you look to the left of it, you see how it's contested by this consolidation. From this candle's high to this candle's low, you see from this swing high to this swing low. And how do you know it's a swing high, swing low? Look, well, this candle's high is greater than the one before it and after it, and this candle's, on the weekly, this is one thing, right? So let's just take this candle. This candle's low is greater than that one and the one after it. From here to here, price is just going back and forth. There's buying and selling being offered here, right? Buying, selling, buying, selling, buying, selling. Now there's buying. There's a little fair value gap creation here. Do you think that this fair value gap with the buying and selling that's going on within the range of it to the left is more significant than the one that broke away? Look to the left of it. What's there? There's nothing there. There's no consolidation after. This is just one side being offered into the marketplace, right? This is, to me, this is the fair value gaps that I love to see the retracement into, right? Now, of course, this fair value gap can still be traded to, but it's just the fact of use the logic and intellect and the ideas that we talk about in this mentorship. And especially from the last weekly commentary, we touched on those fair value gap expansions after consolidation. This is a consolidation and this is the expansion away from it. I want to see the retracement back into this fair value gap. Now, this breaker block is there as well. So, of course, it can overshoot that and it can offer this, this breaker block to be traded to as well. But what I'm waiting for is just a daily candle, right? I'm waiting for the candle to come and trade down lower into the fair value gap or into this breaker. And I'm just waiting for rejection. Now, if that happens early on in the week, that is very nice. Because what do we know from chapter 3? That the opposite end of the range is made early on in the week, right? That's what chapter 3, the back tests show you. And that's what I'd want to see. Because now, right, from chapter 4, if you've done it, we have our drawn liquidity. It's this buy side liquidity here. This is what's being, targeted and what's being traded to. But what do you have to do now as a trader? You have to find your mode of entry to get in line to attack it. Now, as a day trader, we can frame many day trades to get in line to attack this drawn liquidity. Every single bullish retracement into some sort of discount array on an intraday level can offer this, right? Now, it's where do you want to start taking your intraday? And this, take a note of what I said there. When you have your buy side liquidity pool, when you have your drawn liquidity, you're trading towards it. On an intraday level, you're taking intraday trades in line with the buyers until the drawn liquidity is hit. But when do you start framing your intraday ideas? You need your higher time frame areas. I want to wait for, the retracement back into this level. Now, in this fair value gap, we have this nice 107 whole figure, right? This is something that I'm considering as well. The 107 whole figure is this, it's this is as close as I can get to it, but essentially it's here, right? And it's in the fair value gap. As you can see, it's very close to the 50% of the fair value gap. I'd love to see a retracement there and rejection, clear rejection for me to start framing longs until this drawn liquidity is hit. And now I want to show you something on Euro. If we go to the 1 month of Euro, it's very apparent what's going on. Let's look at the candles, right? Forget everything that's going on here. What I want you to do, get in the habit. Your eyes need to go to the open, high, low, and close. This is, the crux of the market. When you're understanding the open, high, low, and close of the candles and what they're reaching for, you will become a beast. I wish I learned this sooner, right? Now, talking about the open high lows of the candle, let's talk about this. When this candle closed, we had this level of imbalance, right? You see when this candle closed, forget this candle even exists right now. And this candle, right, we had some form of imbalance. Now, it was till this candle's low. You see how we just perfectly traded into it, maybe shot it by a few pips. Now, once you rebalance that area and you're clearly coming down, what do you think the candle's close is going to be? The open was here, the high is here, Where do you think the low and the close is going to be? What do you think it's going to reach for? The previous candle's low, the previous month's low, right? Now, we're at the end of August, it's the last 10 days. Do you think that the last 10 days is going to come up and trade back above here? Let's think of it logically, right? Step by step. It's closed that imbalance at the start of the month. Early on in the month, it closed that candle's imbalance and now it's moving away. It's clear what the drawn liquidity is, right? If you go on a weekly, this low. If you go on a daily, this low. Now, what do you have? You have, right, you have this fair value gap to consider, right, from this candle to this candle, right? Now, something that I like to do is, like this candle's, so he like this. I know a lot of you, and I used to do this myself, but I prefer to do it like this now. A lot of you may move your fair value gap low to here. I say keep it here. Do you know why? Because it shows that a candle did dip into this fair value gap before going lower, and that shows you order flow, right? Because if you just put it here, you're assuming that this fair value gap, the initial fair value gap, hasn't been traded into at all. But keeping it there at the initial fair value gap, it shows that this candle did offer, a shallow drive into the fair value gap, and then we drove down lower. Of course, this fair value gap is still open from here to here, and that could be a buy side target if the market does offer it, like reverses and offer it. But keep it from there just to show you that the order flow is that we're moving down higher. We took out buy side liquidity, right? We've rebalanced that entire imbalance from the monthly, right? It was a power of three, moved down, left a fair value gap, a candle shallowly traded down into it. The order flow is clearly looking to trade lower. Lower where? This is the drawn liquidity. You have this candle's imbalance, right? So something that I do is this. I just simply, I keep it here. Now, I sit out the Monday. I sit out the Monday because the Monday, if it starts to trade up higher, right? Guess what I'm going to do? I'm going to wait to get as close as I can to this candle's fair value gap close. That's what I'm going to do. I'm going to wait for this candle's fair value gap to get as close. And that's why Monday is so pinnacle. I sit out the Monday for this reason. I want to see Monday move into my retracements that I'm expecting. If Monday isn't going into the retracements that I'm expecting, then I'm just waiting for it. I'm trying to collect more data. There's nothing wrong with waiting, giving it out a day or giving out a few days to get in line for a longer amount of time, right? Let's talk about the monthly again. The monthly candle is made up of how many weeks? It's made up of 4 weeks, right? 4 weeks. That's the monthly candle. Now, there's a power of three on every single candle, on every single time frame. There is a power of three. Even the 1 minute can be a power of three, right? It could be a power of three of four 15-second candles. That makes the open, high, low, and the close. Now, this monthly candle, it's going to have a Judas in it. What do I mean by Judas? Chapter 3, the Judas is a protractionary move away from the actual intended close, right? Now, 1 week of the month can trade lower and to make that low of the bullish candle, which is what happened here. It's about anticipating where the low is. Now, this candle, right? So maybe like a week or 2 weeks in. Every single time at the midpoint of the month, look at the monthly candle in the midpoint of the month and just look at the candle and think, is it going to trade higher or is it going to trade lower? Just, what's it done? Has it made a high or has it made a low? Is it like in between a high and a low? Is it like a doji candle, right? If it's a doji candle, then maybe this, is still uncertain. But when you get things like this, it's very clear, isn't it? What's going on? Like this candle, right? Look at this candle. We had this fair value gap created, right? We moved up higher. After we left this consolidation, we moved up higher, right? Like remember what I said on the DXY? When you leave the expansion, you consider those fair value gaps. Well, this was one of them, right? You look at this consolidation, fair value gap created. This monthly candle on Jan um, January, the 3rd of January, this was the month, this is where it started, right? What happened? It traded down lower into this fair value gap. Now, if that happened in the midpoint of the week and you're rejecting off of the fair value gap on the monthly, what do you think is going to happen for the rest of the monthly candle? It's going to trade away from it in line with your bias. And why is that so powerful? Because you can have a bias for so long. Now, every single day of your monthly bias is not going to be in line with your monthly bias. That is not the point. And this is something that you guys have to get out of your mind, because a lot of you guys come to me and say the bias is overall this, but the day is on offering me that. That's trading. You're only taking trades in line with your bias. If no trade comes in line with your bias, that's fine. You sit them ones out. Because if you can depict a bias, you should only trade in line with your bias. Why do you want to trade opposing to your bias? It's just irrational, right? If you can have a bias and you're only framing long setups, now your long setups are specific. Why? Because I've taught you in chapter 4 what you're looking. You're looking for offset accumulation. You're waiting for the low to be run and go higher and then getting a retracement. You're waiting for those bullish market structure shifts at your, 4-hour levels to get in line and get in long. Now, if that's not offered, if that signature of the market structure shift off your array isn't even offered to buy, then guess what? You're not even entering long. You're not losing a penny. You're not losing a penny. That's better than most traders. Most traders lose money. You're not even anticipating to lose money. There's nothing wrong in that. This is the type of bad habits and the toxic psychology that make traders lose. That is very key to understand what I just said there. Trust me, have a bias and only trade in line with that bias. I wish I'd done that. It would have saved me so much hassle and headache, right? Now going to euro, I think the euro is the much cleaner one. The bias is very clear. We, you know, closing in that imbalance is very clear what it's heading towards. Now let's talk about Bitcoin before I end this. I think it was Ash that I had the discussion with. I've had this level on for I don't know how long I've had it on, but I've said it's in that Telegram chat somewhere months ago. It's probably drowned out, but it's there. I don't want to scavenge or I don't want to pick it out just for, a bragging right or whatever. It's no need to beat chests. Um, but I had this candle marked out for ages. This fair value gap close at 25,392. Maybe if I type that into the text box, it'll come up. And what happened? Previous month's high swept, fair value gap closure. Where do you think Bitcoin's heading to? Where is the DXY heading to? Where is US 10-year heading to? Look at the US 10-year on the monthly. Swept this candle's low, filled in the fair value gap, overshot it a little bit. Where do you think it's heading to? Where do you think crypto's heading to? Doesn't this candle just look like it's a pending mitigation block to be formed? Doesn't it look like it's just going to be this, right? I'm anticipating this candle to be a mitigation block. Now, if you go to the daily, I think I said it in the last weekly commentary. What's happening is we're just trading higher and we're running buy stops every single time into what a fair value gap. And now we trade it. Look at the displacement away. Displacement away, right? And we broke these lows and we completely disrespected what this fair value gap, right? This candle, we completely traded through it. Now it's evident where, the drawn liquidity is. Equal lows relatively here, and ultimately this swing low point. That's what I'm expecting, at least. So this week commentary is heavily around how to depict a bias, because I get a lot of questions about bias. And this, if you really take notes from this weekly commentary specifically, this is the one that helps you depict the bias. Look at your higher time frames, open, high, low, and close. Look at what's happening, what arrays are being respected. Read the tape for a little bit, right? Like the euro, for example. Like I said, remember here, we ran buy stops. This is the close of the monthly imbalance. Created a little fair value gap here. The next candle shallowly trades into the fair value gap just a bit. Sweeps that previous day's high, comes down. So where is it going to? What are all the arrows pointing towards? A bearish price delivery. Now look at the next area to get in line with the bearish price delivery. This imbalance close here is, is a logical area to get framed into, right? The run on this previous day's high here somewhere into this fair value gap to start forming short entries to attack this drawn liquidity sell side, right? So that's gonna wrap up this weekly commentary, and hopefully Zooms will commence this week. Just starting from Tuesday, Monday, I have something I can't do. Um, but yeah, Zooms come with your questions before.